A lot of things has happened in the month of June, July.
Yeah, things are moving up pretty fast.
Yeah,
Boiling up nicely,
definitely.
especially for gold today after US CPI.
Interesting. I guess we just dive right into it. Yeah?
Yep.
Hey guys, I hope you are having a wonderful day wherever you are. This is yet another episode of Bullish Banter. I'm your host, Jesse. Of course, I'm joined by Rufas yet again. How are you doing?
I'm doing fine.
Yes, a lot of things has happened in the month of June, July. I think by the time this episode going out, another million things will have happened since the last time we recorded, actually.
Yeah, things are moving up pretty fast.
Yeah,
Boiling up nicely,
definitely.
especially for gold today after US CPI.
Interesting. I guess we just dive right into it. Yeah?
Yep.
Gold. This week, I think we have had, when we are recording this, it would be 11th of July. Number one, Powell was testifying in the biannual testimony to the Congress and the Finance Committee, the Senate.
Yeah.
What did you take from that?
Well, I would say that man is hard as a rock. He doesn't crack easily.
Pure lawyer and legalist language.
I liked how he was grilled by Elizabeth Warren.
Yeah.
But all in all, at the end of it all, he maintained the same policy
Yeah.
that the Federal Reserve is independent, doesn't get involved with the political side,
Yeah.
especially right now that the politics in the US are so hot
Yeah.
about the presidency and the election in November. Then the takeaway for the economy is that the Fed is still data dependent. The previous problem that the Fed was facing over the last 2 years
Yeah.
was controlling inflation back to 2% target, but they didn't have any problem with the job market. But then after last Friday's non-farm payrolls showed that unemployment had ticked up to 4.1%. Now he acknowledged that he has a two-pronged, I would say a two-sided problem, where Fed has two mandates and they still have to achieve them. And now they're increasingly getting worse.
Yeah, it's interesting that you mentioned that because I followed on the Congress interview whereby they were asking with the new Trump Project 2025.
Yeah.
For the audience, you can go and, search about it. I think it's political sort of manifesto.
Yeah.
Whereby they want to sort of clip the wings of the Fed
Yeah.
to only focus on dealing with interest rate
Yeah.
and the dealing with the employment issue to go to the other side of maybe Congress or the political wing.
Yeah.
And I would like to join that with the Bank of England economist Hugh Peel yesterday was giving a statement, and he was saying that as a central bank, basically their decision is not dependent on just dealing with inflation alone.
Yeah.
Or services alone.
Yeah.
Or maybe employment data or manufacturing, if you consider that.
Yeah.
But they consider all of them together
Yeah.
before they're able to make a decision.
Yeah.
Because in England, they achieved below 2% in May.
Yeah.
So that's a good thing.
Yeah.
Perhaps on 1st of August when BOE meets and 31st of July. Personally, I think there is no cuts this year.
Yeah.
I don't think.
The last time we saw US inflation at 3%
Yeah.
was in July last year. So exactly in 1 year period, inflation has just shifted around 3%, moving
Yeah.
3.1, highest 3.7,
Yeah.
and then back to 3%. So until you break that 3% barrier,
Yeah.
inflation is still significantly high.
Okay.
Because if 3% was a target, why didn't they cut interest rates in July last year?
Definitely. So it's still 2%, right?
Yeah, the target is still 2%.
There.
So we would have to get a couple of more data points. Maybe we look at July inflation, August inflation, and in that case, if there's a reasonable drop towards 2%, maybe the Fed will consider cutting in August.
Yeah, staying with global, because today we'll be covering a lot in regards to local markets and economy.
Yeah.
We are still seeing in France, the right-wing party basically got wiped off again.
Yeah.
So the Liberal have another win again, like their compatriots in United Kingdom.
Yeah.
Do you think that's an interesting change in political narratives, or it's just normal cycles in the political sphere?
Well, none of the parties have a majority. So even the middle ground had their own seats.
Yeah.
So what we saw is that now they have a conundrum where two parties have to merge
Yes.
to get a majority and then select a prime minister.
Interesting. Coming back to Kenya, I think it's fair I mentioned these global aspects of what we'll be covering today. Fitch downgraded Kenya
Yeah.
to CAS1.
A1, yeah.
Yes, basically meaning that we are not really creditworthy as a nation.
Now we're in the red zone.
Okay.
Yeah.
And this is after, of course, a controversial financial bill, which was scrapped earlier.
Yeah.
Maybe it has some effect because it means we might not really be able to, raise enough revenue to meet the budget deficit of Kenya.
Well, I wouldn't say that was the only reason why we got the downgrade.
Yes.
We also had this week, the central bank was looking to raise 20 billion.
Yeah.
And then they raised about 340 million.
Yeah.
Which was about a 2.4% subscription rate.
Yes.
Which was a red flag to any credit agency.
Yes.
So that took a big part.
Yeah.
On the other side, I believe the issue of the finance bill had the biggest impact, yes.
Yeah. Do you find it very interesting that, in February, we had, raise another bond around 2 trillion?
Yeah.
2 trillion. Is it 2 trillion? Yeah.
Yeah.
$2 billion rather.
Yeah.
So to just raise, to, pay the 10-year bond that we took in 2013 thereabout, or 2014 thereabout, paid, I think, 70% of it, I believe.
Yeah.
Kenya shilling benefited from that massively.
Yeah.
Personally, I'm enjoying, and I prefer if we have some stability on the KES.
Yeah.
But do you think how the physical, I think this would be the physical and monetary part within the Republic of Kenya, does it have something to do with, their ratings on us and future investments into Kenya?
Well, I would think about it this way.
Yeah.
Let's say it's a personal debt that you have.
Mm-hmm.
The debt is maturing at the end of the month of, let's say, July.
Yeah.
So we as speculators in the market are speculating on you and your currency. So we do the math, look at your personal economy and stuff,
Okay.
look at your projections and realize that there is no way this guy can pay this debt by that 1st July. So what do? We bet against your shilling dives all the way down.
Okay.
So somehow you get some good connections, you got some good friends, and then you're able to raise the exact amount towards the maturity.
Yeah.
So that 1st July, you get a loan and then you repay.
Okay.
So when you repay that bill,
Yes.
now the urgency is eliminated.
Okay.
So we retract bets against your currency, but we have not completely eliminated the bets. We're just waiting for you to get close to the next default.
Okay.
Yeah.
So I guess we have mixed a lot of things from, ratings to bonds and everything.
Yeah.
So maybe we can just try to untangle them one by one.
Yeah.
I will start with, of course, the sentiments to the Kenyan economy.
Yeah.
I think that plays a big part. The ratings mean that perhaps foreign investors, the FDIs might maybe reduce or decline significantly.
Yeah.
Because I think there is now, again, I've just mentioned another recent Sons Group, which is looking to purchase Bamburi cement.
Yeah.
That's one FDI we are seeing for indirect investments.
Yeah.
So I believe there are some sectors in the economy which are still ripe for investment in cash.
Yeah.
Maybe not the others. That is number one. Ratings mean that perhaps we cannot go and seek, foreign financing for government purposes. I think that is number one.
Yeah.
I know finance bill, the 2024 finance bill has really, brought a lot of emotions and angst among people.
Yeah.
Are we likely to see that in Kenya maybe in the coming days based on what is going on and the conversation? Because if you look at what, economists in Kenya have been suggesting, perhaps the solution is very painful, to say the least. It will bite for a while. It's already biting, but it will bite for a while. Are we likely to see maybe real fiscal consolidation, maybe reduction in government expenditure, be it on recurrent or development for a while? So that maybe, because I know IMF prescribes, before we give you this money, raise this amount.
Yeah.
And I think some have said, if you are talking about consolidation, that might also imply cutting down on some core expenditures.
Yeah.
Would that be some of those things which can maybe improve the perception out there for other investors?
Well, definitely yes. Judging from what has happened today,
Yeah.
the president firing all the cabinet secretaries except one,
Yeah.
that is a step in the right direction.
Okay.
Of course, there will be increased measures when vetting and hiring the next set of cabinet secretaries.
Okay.
The permanent secretaries were told to reduce their advisors to one individual.
Yeah.
So I believe we are heading in the right direction. So if we happen to reduce the expenditure, which is the fiscal program we have been having,
Yeah.
then we'll have a better balance on the budget.
Interesting.
So the need to borrow out of money, especially from the international markets, will reduce significantly, but then it might transfer some of that needs to borrow internally. So you might see a more aggressive central bank looking to raise more money locally compared to externally.
Interesting. I think, if I'm not wrong, based on the 2024-2025 budget, we are talking about around 3.8 trillion thereabout.
Yeah.
And I think there is about 2 trillion with a few hundreds of billions on top, maybe 300 or something.
Yeah.
So that means we have at least 1 point something trillion in deficit that we require to raise, be it from, international financing. When you say that, I know some will be political. Like, I guess we'll not really delve into that much.
Yeah.
Raising in the local markets.
Yeah.
There was a communication, I think, from central bank and Treasury, whereby they were to raise the, the ratio, cash reserve ratio for banks.
Yeah.
And I think previously I did a research way back in campus about, we have almost 43 banks. That time our population was 42 million.
Yeah.
We have 43 banks in Kenya servicing maybe around 10 million Kenyans.
Yeah.
At least those who are actively using it.
Yeah.
And with the cash reserve ratio being raised, that's one of the measures to ensure that there is mopping of a lot of cash and at least address inflation.
Yeah.
Central bank has been raising as well bonds, and they have issued another guideline to say that they would like retail investors to get in. Yeah. So that's a number 2. And also there is that suggestion to, invite or rather revive Emakiba, the mobile money, bond.
Yeah.
Based on all, from the politics to the ratings and maybe for fiscal consolidation, do you think if the government are able to address the fiscal policy of theirs, local citizens would be willing to finance the government by either investing in bonds or the normal short-term treasury bills?
Well, I would say look around. What do we have besides government bonds that is actually performing well? If you look at the average business person, the average employee around the country, they are all putting money where? Either they're putting money in SACCOs, they're putting money in money market funds or banking institutions, be it the major commercial banks or even the microfinance institutions. Yeah. So when they put money in those finance institutions, they take a portion of that money and invest in bonds, right? Yeah. But then if as an individual, you're trying to compare the rates across different markets, you realize that the SACCOs, the banks, the microfinance institutions, the money market funds, none of them is giving you a much better rate than the central bank. Yeah. And now that you have access to the central bank's portal, the CSD, it makes it easier for you to invest in that government bond. And from what I'm guessing, based on my own personal analysis, having seen the recent events, especially during the protest where the bond subscriptions went really down, the government may have to increase the yield on their offering in order to attract more capital. So if people are refusing 17%, it means that the government might have to go higher in order to attract more capital, and that might incentivize even more people to put money in bonds.
Yeah, you mentioned that, and I'm trying to look at, the report where we got a new bond which was issued, the 10-year reissued. This would be 2023 number 2, which had, quite low subscription rate. I think to around 2.4%, and their coupon rate was doing around 16.9%. Yeah, and then if you look at the 3 months auction results, by the way, this data is available on central bank website, so you can always check on it on a weekly basis. If you look at the recent auction results, both for the newly reissued bond and, of course, the treasury bills, which are normally either 90 days, 180 days, and obviously 360 days, you notice that it's like it is inverted. People are not willing to lock in their money for at least a longer period of time in the government, not exceeding 1 year. But they do trust that even though we are experiencing some, some degree of change and a wave of very interesting and I would say positive scrutiny of how government expends public funds, they have faith that even though, the rates would not, let's say, be very interesting for the short term, it is worth it. Now, I have another way to look. I think on the finance bill, they included that they would maybe, which was scrapped either way. There was some suggestion to remove the, with the holding tax on their long-term bonds. So it is interesting that even though the 91 days bond was given at a coupon rate of around 15.9%, 182 at around 16.7, 364 at around 16.82, while the 10-year bond is doing 16.9. I think if things go the way they are going right now, we might have an inverted curve in Kenya. Based on the recent readings on our issued treasury bills, that is the short term not exceeding 1 year. If you compare that with the government bond, the newly reissued 10-year bonds, we had a significant dive in the subscription rate. And if you compare the two coupon rates which was offered, 16.9, a couple of numbers on the 10-year bond, and almost similar rate on the 1 year treasury bills as well. Because I think on the 91 days, we were talking about 51. So that brings the question, despite all the political narratives and the changes and scrutiny towards the government fiscal policy, it is like citizens have a high, confidence that we will resolve the short-term issues, be able to repay perhaps the short-term, treasuries, and maybe they are not so confident about the long-term view.
Of course. Judging from the report we saw from the chief economic advisor, David D, he basically published all the debt maturities that we are bound to pay over the next 10 years. As of this year, we are supposed to pay about over 2 trillion. No, it's over, I think it's, over $2 billion plus interest of 1.5 billion, which makes it around 3.5 billion. So that's what we were looking to pay this year.
And that frees from, of course, the SGR and all the infrastructure.
And that's just external debt. So all this debt was pegged on the successful implementation of the Finance Bill 2024. So now that the Finance Bill 2024 is not there, in order to be able to pay that amount of money, we will need to do fiscal consolidation, not in terms of raising taxes aggressively as we said on the finance bill, but rather on cutting government expenditure.
That's a long shot. I think
it's achievable. I believe it is achievable.
Yes.
The problem is when you look at the whole chart and you look at the next year, 2025 and 2026, by 2026, that loan repayments will have more than doubled.
I mean, we are both economists, and what we are taught in school is that if the government spends money, it has the snowball effect to pick up some economic, be it wealth distribution, be it income distribution along its path. We are taught that way. I think it's John Maynard Keynes who taught that, or rather is known as the Keynesian economics. Of course, in between you find your own path of how you think the government should operate. For example, myself, I think the government should be as lean as possible and allow some market enterprise to price the products
Yes.
and the consumer to have their own monopoly of choice.
Yes.
But of course, the government should ensure that the laws, the common laws of land, the common laws of private property, justice system is working to ensure laws of contracts are obeyed. I think that's the most important thing. Now, besides the economic philosophy, I think what I am looking at Kenya is that if you, as you are saying, there is no better investment, be it in the Nairobi Securities Exchange or land or anyone that pays such a rate, 15%. And I think one of the key issues I don't want to link this, but I think it makes sense to put it out there. On the finance bill, they were proposing to put in, the withholding tax in that side, which has been repealed. I think that uncertainty around it has perhaps maybe caused people to worry, especially one of the largest buyers of government bonds has been made the pension funds, insurance firms, banks, and I'm sure they do not want to have also a big liability on their books after investing people's savings, considering we are in a high interest rate environment, and NPLs, non-performing loans, are not really going down.
They are rising.
Yes, in terms of their risk, they have to measure and say, maybe let us hold on to this offer. We'll look at it in the future.
The government operates on trust. The main reason people put money in the government is because they trust that the government will be able to pay. It won't change rules in between. And then what do we get? Government issues a tax-free bond. A few years later, it's looking to revise laws and say that we are going to implement these tax on our bonds. So those random changes don't necessarily inspire trust
among local investors and even foreign investors, because they need those dollars to come in. On to what we ideally, we have traders at FXPesa, but we also have investors who maybe I think this year, NVIDIA has been giving people printing greenback like nobody's business. Nasdaq is almost 30% up. I think this week we have just had like 3 or 4 all-time highs printed today in the S&P, US 30, and of course Dow Jones itself.
The Dow Jones hasn't hit a new all-time high
yet. I think it's back to the 40K that we are used to. Okay. Now, somebody will be looking to, where can I put in, slow growth, slow burner in Kenya? I tend to believe that if and when, if I read the sentiments in the locals, they are very passionate about their country. I don't think they mean bad for local companies or the Nairobi Securities Exchange. So they might be looking, if things settle down, especially from the government side, they might want to say, actually this company is doing well. Of course, this is not an investment advice. Let's say something like maybe Equity Bank, for example, is doing well, is doing all these things. Maybe I might try to put in a few shares, get to earn, because this year we have had almost all banks announce profitable 2022, 2023 financial year. They did do well, paid a good amount of dividends. You want to benefit from that next year. Besides, of course, the ongoing uncertainty. Are we likely to see, if besides the Fitch rating, and I want to bank on the rallying call that I'm seeing a lot of Kenyans do, them participating actively, not only just in making sure perhaps government behaves, but also the financial services sector, be it the bonds market, be it the Nairobi Securities Exchange market. Are we likely to see maybe a surge in maybe participation?
Well, I would say the Kenyan stock market was one of the best performing stock markets this year.
It is, I think, still doing pretty much okay.
Not because that companies are making record profits and everything is rosy and doing well. It's only because last year it was one of the worst performing stock markets in the world, where prices of these shares went down so far that every time an investor would look at these share prices, they would be like, no way, there's no way I can get Safaricom at 13. The prices got so close to intrinsic value. Some of them went even lower. and guys jumped in at the opportunity.
Okay.
And from then we have seen the stock market making a very good recovery. So it's more like, let me explain. Do you remember during COVID, that was March 2020, the US stock market crashed within a month.
Yeah.
The second month, the third month, people saw that there's no way you're finding these good prices on companies like Tesla, Apple, and so on. So, yeah, bought in, and within 3 months, we had an 100% recovery.
By around July, they are about.
So, based on that analysis, it doesn't necessarily imply that the Kenyan stock market is performing exemplary well. It's only that the shares are doing really well. So I would say if you're looking at the Kenyan stock market, it's more, I would say, if it was Warren Buffett looking to invest in the Kenyan stock market right now, he would be very much interested in seeing the earnings reports. So he would dig right into those books of those companies individually, see the potential of a company continuing to perform well given the current economic circumstances. And if there's promise in that, then they would go for that.
I think that's a good way to look at it.
Yeah.
What even I am reading this in two ways.
Yeah.
Whatever is happening in terms of demanding accountability from government.
Yeah.
Hopefully, if you look at US hedge funds or fund managers, they always look at emerging markets or developing economies when they are looking to invest based on two things. How much is government involved in the companies running?
Yeah.
And therefore, is that a real risk in terms of their returns?
Yeah.
And two, how stable is the politics of that economy? Is it that every election cycle, do they actually conduct election so that when they invest in a company or a sector in that country, they are confident that their financial injection is a vote of confidence to competent leadership?
Yeah.
And I want to say some companies in the NSE are really run well.
Yeah.
And I think maybe, others have some government in participation in their board, which makes sense given how they were actually formed. Yeah. And it only makes sense for the government to earn some revenue from it. Yeah. I think there's also a directive from the cabinet in Kenya to divest in some of the companies in Kenya, which I think is a good thing now. Yes. Like I said earlier, if the government can be able to let this company thrive based on either shareholders' voting rights and an economy where the taxation policy is predictable, they can really do well because they do not only be it provide raw materials like the, I think the East African Kenyan, they do have contracts or revenue streams across the continent. And that means their risk in terms of raising cash or sales is not really predominantly on a Kenyan market, but also a huge potential, be it on energy provision in Africa, be it on telecom provision in Africa, and be it in the banking side where M-Pesa has really been pioneering. And I'm seeing Ethiopia in DRC is equity in Ethiopia rather. Equity in DRC is really one of the best performing arms of Equity Group. So I think the Nairobi security sector is full of potential. I guess it's just about time to see how this entire boiling pressure increasing and decreasing will transition into how companies operate and their corporate governance.
I think the Kenyan citizenry right now is very much awake.
Yeah, definitely.
The same way they are studying civil rights, studying public policy, debt management. That will also transition to these companies. So for any company caught in any form of scandal, trust me, they will be scrutinized.
Yeah, definitely.
So which works even better for investors. So at the same time, I would insist that scrutinizing, researching, and analyzing these companies is key. And I agree with you that a company having a diversified revenue stream makes more sense than a company that is focused on really one product. So for instance, if you look at a company that is just selling tea to a smaller number of customers, might not compare to, let's say, a banking company that has multiple, I would say, smaller banking companies across different countries.
Yeah, definitely. Now, towards the tail end and the most important bit of this discussion, the exchange rate of Kenya shilling against the dollar. Of late, it has been under, either praise or extreme loathing, depending on which side you are in. I think, of course, this is just my personal opinion. I maintain after the last podcast that the MPC might want to do something, given that they have achieved their target. And I'm following just the principle that if you're able to achieve inflation below 5% year on year, that's achievement.
That's a big plus.
Yes. So they might be looking to ease the burden on maybe Kenyans. Of course, they will not do a major dive, something small, maybe 0.5. And that one I know will weaken the shilling a little bit. Because it will mean reversing the restrictive measures that they have put in place. But I think on the other side, the cash reserve ratio will still act as a restrictive measure if it is implemented.
Well, for the cash reserve ratio, I think it's a big thing. If you check some of these banks' books, I don't think they can afford to transition from 1 billion to 10 billion. Like the current proposal is that they have to expand their cash reserves from 1 billion to 10 billion. So each and every bank needs to add 9 billion to the central bank.
Okay, no problem.
Do you think all the banks can afford?
Now that comes into what I initially mentioned. We have almost 40 banks and I think almost 6 or 7 microfinance banks in Kenya. We might see a merger and acquisition because I'd say Kenya doesn't have, in the context of US, regional banks or local banks. We have microfinance banks transitioning into commercial banks, but we really do not have like a local bank, which is its entire foundation was to maybe issue local rent, local cost housing or something like that. They are just purely commercial banks for you to put in your savings and stuff. So we might see a lot of mergers, which I think can be good for efficiency for the short term.
I thought you said you are pro free market.
No, I'm just saying, realistically speaking, from the already issued policy guidelines, that is what is happening. Of course, free market is there.
Technically, and these smaller banks will be priced out of their market. Forced to be acquired by the bigger banks. I don't think that's a step in the right direction.
Now, that's where shareholders come in. Because, mergers do not necessarily mean that efficiency will prevail. That's proven over time.
They bring an oligopoly and potentially a monopoly.
Exactly. So that means something will change in the future, be it on central bank guidelines and everything like that. But my point is that if we're able to see, I'm trying to balance between restrictive policy on the monetary side and ensuring that social welfare of people is also, to some degree, their burden is eased. Now, to the exchange rate, right now it is around 128, has been doing that for the last 2 weeks. Personally, I prefer it to stay there. We have a ceiling of, let's say, 130, on the lower side, 125. If we're able to have that for the next 1 or 2, maybe even 1 or 2 years, that can be really good for the economy. Because if you are a foreign investor, you know what the worst can happen in terms of when you're selling your dollars for Kenyan shilling. And if you are looking to go outside, you know how much maximum you can pay just to go outside or buy your dollars.
Well,
what's your take on that?
Given the current financial situation in Kenya and the number of maturities that we have over the next 3-4 years, it's not a question of if, it's a question of when we will default.
That's where reality now kicks in my mind.
It's a question of when. So the projections we had, especially looking at the finance bill, were to keep expanding the taxation, the tax rates as well as the tax base, to reach as many people as possible, be able to cover this burden of debt,
the deficit at least on the budget, and obviously eventually on the debt.
But this was not the first finance bill. We had another one last year. So the finance bill 2023 didn't manage to capture the targeted taxes. So which means that the entire economy was facing a Laffer curve. So a Laffer curve is a curve where if the government raises tax rates to a certain level, then the economy responds negatively, and the government ends up collecting less taxes. So we have seen it happening over the last couple of years. For instance, the moment government added taxes on airtime, a lot of people started now making phone calls using, let's say, WhatsApp and other applications. And at the end of the year, Safaricom made less money on airtime and the government collected less taxes.
Definitely.
So it's the same thing that happened last year with fuel. So price of fuel goes up, people reduce their consumption of fuel, government collects less tax revenues. So just by switching up the tax rates and then expanding the tax base doesn't automatically mean that the government will get the targeted revenues. So the fact that we had hit that Laffer curve and now the policy is working negatively to government revenue, then it means expanding that even higher would work even more badly towards the government. So in this case, there needs to be repurposing, re-strategizing to see how a government can raise more revenue without necessarily raiding the same pay slips it had been raiding over the last couple of years.
Interesting, Philo. So what do you think Kenya shilling USD exchange rate will be? Because I'm starting to see a creeping of a lot of FOMO, which I think is a mistake, and that is what happened earlier in February when it was going up. I think it started going up 1 or 2 days before the Eurobond hit the account. People are buying it at 160. And right now I'm seeing people sell it. And knowing if things go the same way they went to
Forex trading can be tricky. Especially when you don't know what you're doing. The thing is, as early as last month, you know, this industry requires you to change your mind every now and then when you are presented with new data. So when the president landed in the US and came back, the number of deals that were announced, collaborations and everything, I immediately changed my mind and I said, this Kenya shilling is definitely going to 120.
It was actually looking like it's going even to 100 if possible.
We have seen the finance bill rejected. Today, the cabinet has been fired. A lot of deals have been cancelled by foreign direct investors. And now, given the current situation that we have seen with the debt maturities and interest rate payments, I've just told you that there is a really high probability that we will default in the next couple of years. So what happens to the Kenya shilling? The bets that were betting against Kenya before repayment of the Eurobond will come back and you will see the Kenya shilling go back to 160.
I think once the finance bill was repealed, I looked at the yields. They were really falling hard, I think, at that time. Maybe I'd like to check on with it in the month of July, how it fares. Can be a good indicator. Personally, I would wish, of course, I would be positive in this regard, at least for the short term, like the treasury bills investors, bet on the government in the short term that use this cash to sort your mess or sort your issues. And then maybe once things calm down politically and fiscally, there's some degree of consolidation, maybe with the lenders, a deal could be struck to ensure that we wiggle ourselves out of the temporary pressures, especially just to make sure that the economy is at most, or at least producing to optimum level to ensure some degree of cash flow, because what is important, I think, right now is cash flow. If we have that cash flow and not really a cash crunch whereby business are not producing, so people cannot be paid, there's a lot of pending bills, that can be a really danger to the not only to the economy but obviously to the individual pockets of people. I think this has been one of our most philosophical episodes in regards to government, finance, politics, and of course public finance. Hopefully our views add some insights to what is happening. But if you have any comment, addition, of course, remember to share them on the Spotify comment section. We really do appreciate that. And maybe
Eurofinals this weekend.
By the time this episode is going out, the winner will already be announced. So I would wish and support Messi to win Copa America. And then England versus Spain. Let football go home. It has stayed away for too long. They have called it home too many times, you know. I would be happy for them.
Well-
I'd really be happy for them.
We would say I like Cole Palmer,
Yeah.
but yeah, I'm betting on Spain.
Yeah. So there is that. I guess by the time it comes out, we'll see who has won.
Yeah.
Remember to follow us, Bullish Banter, on Instagram, Bullish Banter on Twitter, or formerly Twitter, now X, and of course on TikTok if you are there. Other than that, I've been your host, Jesse. Adios.
Awesome.